Dear students, welcome you all for the 23rd session of Personal Investment Management. So, in this session, we are going to discuss various risks involved in stock market investments, and particularly, we are going to discuss in detail with unsystematic risk. In the previous session, we have discussed in detail systematic risk and its various types. So, in this session, we are going to continue with unsystematic risk. Let's understand what is the meaning of unsystematic risk. So, unsystematic risk is also known as specific risk. Systematic risk is a general risk. It applies to everyone, every sector, entire market, entire nation, entire economy. But unsystematic risk is opposite to systematic risk, where it applies to specific industry, specific company, specific sector. So let's go to the meaning of unsystematic risk. It is also called as specific risk and which is linked to a particular company or industry. Unlike market risk, this risk can be reduced by diversifying your investments. One of the major feature or characteristics of unsystematic risk is diversifying in nature. You can diversify this risk or you can easily manage this risk. So if one particular sector is affected, then definitely we can think of other sectors which are not affected. If one particular sector is not performing, then we can definitely think of other sectors where we can diversify our risk to other sectors. So that is a fundamental feature of unsystematic risk. Let us discuss in detail various types of unsystematic risk. So first one is business risk. So what is business risk or company risk we say? So business risk is related to its business, its operations, its management, etc. Let's understand what is the meaning of business risk. So business risk refers to the possibility that a company may face losses or even shut down due to poor management, declining demand or financial instability. So it is very clear that business risk is a possibility that company may face losses or company may shut down because of the poor management or maybe because of the declining demand or maybe because of in financial instability. So this is completely related to that particular company or particular business, which is not going to affect other businesses in the particular sector. For example, we can see related to business risk, 2023 Baiju's financial crisis. So Baiju had major financial crisis in 2023, and because of that, company had to struggle with mounting losses, and there was also problem of investor exits. So many investor exited this company, and company had a lot of problems in 2023. And another example we can take of Jet Airways. So where Jet Airways had to shut down its business itself in 2019 because of the mismanagement which had happened in the entire business or in the management, and also because of the rising operational cost. It is because of due to various reasons its operational cost has raised too much, which was not able to borne by the management. And the second type of unsystematic risk is financial risk. So it is related to the finance of the company. If the company has borrowed money and if the company is not able to repay it, or company is not able to earn sufficient return, then definitely company will face financial risk. So let's see the meaning of financial risk. So this risk is related to the company's ability to meet its debt obligations. So if the company is not able to repay its debt or is not earning the sufficient revenue so that it can repay its debt, then definitely there will be a financial risk. So what happens? High debt levels will make the companies vulnerable, and definitely it will make economic downturns, and this will affect badly to the company's growth. Some examples for financial risk: DHFL, Diwan Housing Financial Limited, which was collapsed in 2019. What happened? Okay, the major reason was excessive debt it had borrowed, and which was the company was not able to repay this debt, and because of that, it had faced a lot of issues and it had to collapse in 2019. And there was also financial mismanagement within the company. And there is another example related to financial risk is S Bank. So S Bank crisis happened in 2020, and again it is because of financial risk. So banks stock came down or crashed too much, and it was SEBI and government had to intervene to reconstruct the bank, and later it was reconstructed. So this is the examples for financial risk, how financial risk affects the entire company as a whole. The third one is industry specific risk. So it is related to particular industry. It will not affect any other industries. For example, uh, if the fuel prices rise, then definitely it will affect uh, some aircraft industries or the industry which use fuel as a raw material. So let's see the example meaning of industry specific risk. Some industries are more volatile than others. For example, technology airline companies face greater risk due to innovation and fuel price fluctuations. Definitely, we can see that some industries are not so volatile. Some industries are more volatile, maybe because of so many reasons. Example, we can say uh, technology, IT sectors. IT sectors are more volatile because we do not know what happens in US and Europe regarding the outsourcing regulations. So if something happens, definitely there will be more volatility can be seen in IT industries, as well as the airline companies. Because of some fluctuations in the price, airline companies will be affected, and there are examples for that also. The decline in IT stocks in 2023, there was a major concern because of the global recession, and the major concern was the reducing demand of outsourcing, and that led to Indian IT stocks collapse. And another important example we can see is the rise in the fuel prices in 2022, which impacted Indigo and SpiceJet very badly. And SpiceJet had to face a lot of problems because of this. They were not able to cope up with the rising prices. And the fourth one is volatility risk. So we know what is the meaning of volatility, that is fluctuations in the share prices. So volatility risk arises as stock prices fluctuate over time. Stock prices will not remain constant. Definitely it will fluctuate because of the demand and supply. Some stocks have high price swings. Okay, they will go up, they will go down, they will go upward only, they will not come down at all. And some companies may not do like that. Okay, what happens? So those companies which have high price swings, which will make them riskier for short-term investors. The short-term investor may not invest in such companies because of the high price fluctuations. So that will create lesser demand for such type of shares. Example, we can see the extreme fluctuations in Adani Group stocks in 2023. There were a lot of fluctuations in the prices, coming down, coming up, which will definitely make the short-term investors not in a decision to buy the shares or invest in such company shares. So after there was some irregularities reported by external agency, there was a lot of fluctuations. So after 3 days, companies shares used to go up again. After 3 days, it used to come down another because of some other reporting, etc. Fifth one is credit risk. So credit risk is related to the debt, or we can say that if the company is not able to repay the debt, then definitely there will be a credit risk for the company. So this refers to the possibility that a company may fail to repay its debt. Company has taken the loan, uh, taken the loan, borrowed the loan, but if it is not able to repay the debt, so debt can be in the different forms. It can be debt securities or directly loan from the bank. But if it is not able to repay the debt, then definitely company will face the credit risk, so which will have a lot of impact on the company's uh, debt securities. So the impact is whether to hold the bonds or whether to sell these bonds, whether to lend money to this company or whether to not to lend the money to this company. So there are some examples for this. The Vodafone Idea financial crisis had uh, due to its high debt burden, company had, had to face a lot of issues with regard to holding the bonds, holding the shareholders with the company. Then default of Reliance Communications in 2019 also had similar crisis, had to face similar credit risk, which led to huge losses for the investors. So even the investors holded the shares, thinking that the share prices will go up, but it did not happen like that. So investors had to lose a lot of money because of this particular risk. So these are the various types of uh, unsystematic risks, and we have discussed with some examples. uh, Definitely it is very essential to identify, understand what are the various types of systematic risk and unsystematic risks that will affect not only to the corporates but also to us as individual investors. Thank you for watching this video. Thank you so much.